Hi, Richard here, starting with a chart of the US dollar on Thursday the 9th of December, currently about 2:30 in the afternoon. We've just had the labour numbers come in, which were around about 50,000, which was 30,000 more than expected, so that's an increase, which is positive for the Australian economy. But let's have a look at what the US dollar is doing. Well, it's come up and hit the 50 moving average and has pulled back as expected. We expect a little bit more downside over the next day or so, but on the daily you can see that little spike high doji reversal there would suggest that we've got some more downside to go back down to about the sort of 78.65 level, which would indeed cause a rise in the euro and a rise in the Australian dollar and a bounce in gold and silver after the last few days' heavy sell-off. On the Dow Jones, three-wave correction coming back for an A leg, and then up for a B, and then tonight we'd expect some downward action, either to finish this triangle that we talked about the other night. That's the red line that we left there. That would finish it for an E here, and then head on up towards 11,800. So that would be part of that rally that we've been talking about for some time. Alternative is that it's actually a flat correction, meaning that we'll get a 5-wave down activity going on here, which would take us through the 11,000 mark and down towards the sort of 10,600 to 10,800, somewhere in this zone here. This is the Australian SPY ASX 200, and you can see that this what I would broadly call a mongrel sideways trend since late August has been still in play. A little bit of range going on, up as high as 4,800, down to our target at 45.30, which was hit, and now we've 1, 2, 3, 4, 5 back up to test resistance again at 47,760. So the expectation is that that resistance will hold for the short term, when we will come back down in line with what we just talked about on the Dow, and then push through up to 4,900 to complete the sequence, possibly, if that really gets steam, up to 51.28. Here's the Australian dollar. This is the result of the labour figures. There's a bullish engulfing pattern in there, support off this long-term upward sloping resistance. Expectation is probably to push up a bit higher. That really depends on what happens tonight with the US dollar. If that unfolds down as we talked, then this is likely to push back up. Whether it'll test parity, well, the question, that question mark remains. But you can see on the market force here, the trend is still up, and even it's a lovely indicator, this one, is that even with the three-wave, three-day pullback. And incidentally, this in terms of candlestick charting, this is a very bullish pattern. If the Australian dollar finishes higher here tonight, that is a bullish pattern with a high chance of success. That's very interesting. So 3 red bars encased by 2 bullish bars usually means a continuation pattern. So let's stand by for that. Could well push up and test that parity and break through if that pattern unfolded. That would of course negate the head and shoulders. Here's the left shoulder, head and right shoulder. In the event that the neckline is broken here, then that would unfold this target down here at 92.60. Just a quick look at the euro. Clearly it has been struggling. The broader trend is down. In the event that the US dollar pushes down, then this will come up and break through and test the line with a target of about 1.360 would be the target there, and that would be in line with the Aussie dollar that we just looked at. Here's materials, clearly still bullish. The market force indicator still telling us that everything's up, and indeed it's looking to test this high at 14,100. Whether it goes through or not, or this is in line with the A, B and down for C correction, well, we'll have to stand other side to wait and see. As far as the financials go, well, it is testing, as it has been for quite a few days now, this upward sloping trend line. The market force tells us the trend is up, and we're staying long as long as that indicator is pushing up green bars. And gold, it charged back down, heavy sell-off, over 3%, to be able to test the support line again. It hasn't quite hit it, not far off it. Market force has given us a couple of red bars. Under normal circumstance, that would be an entry trigger. We normally enter on the second bar, but given this very significant support line has been in place for some time, that would be a foolhardy exercise to do. And also given that the fact that the US dollar is looking like coming off to complete its 5-wave pattern down in terms of the ABC correction, 5 waves in the C leg, then, as I say, it would be foolhardy to take a punt that gold is going lower, and instead, we'd look to probably see that trade up a bit, and indeed the opportunity could be on the long side there. A lot of spike high activity with oil. Classic doji reversal there. That would be very much in line with what's going on in the Dow. If we get this correction, then oil should charge back down over a few days, and you can see the extent of these corrections when they unfold. Really quite powerful. When oil lets go, it really comes off very rapidly, as you can see in all of these sell-offs. So here, another test, and then down we'd go. So the target there would be, anywhere around the sort of 84 to 8200, depending on whether it's a zigzag correction that's unfolding. Sorry, not a zigzag, but a triangle correction that's unfolding in the Dow, or indeed a flat. If it's a flat, it'll come lower before we head higher into December to complete the sequence. Alright, well that's it from the Market Forecaster. I'm going to issue another video on financial stocks as well as materials, just to get a feel for those individual stocks. So have a look online and the videos section of the website at marketforecaster.com.au.